Good afternoon. Welcome to the Business BoardCast. I'm Nikki Larkin from Growing Accountants and Succession Planning, and I've got Nick Phillips here with me from the Business Board and Succession Planning as well. Hi, Nick.
Hello, Nikki. How are you?
I'm all good. You'll notice that in Succession Planning, we only hire people beginning with N. We've got Nick, Nigel, Nikki. Anyway, welcome to today's BoardCast. Today we are going to be talking about valuations in the technology sector and basically how to value your business if you're in the technology sector, and some things slightly on the sides as well, on what's useful when you are selling in that sector. So Nick, where are we going to start?
So first of all, thanks for having me on, Nikki. Always a pleasure. I think today we're going to start with what buyers will be looking for. So we'll be looking to tap into your wealth of experience in the tech sector, and I hope we can start there and maybe pick out some of the things that the buyers will be interested in when a tech firm is looking to sell.
Oh, right. So starting off with the factors looking to sell. Okay. So things that people will be looking for is the area that you're in, making sure that it has got longevity, because everyone that's in technology knows that there is a life cycle for all the products and services. So be looking at where it is within that life cycle. So you want to still be in the growing phase, hopefully, if you're selling. And so that would be sort of start to understand that, to make sure that it isn't a dying part of the industry, and making sure, looking at what pipeline is, be looking at the numbers, so historical, but also what the pipeline is. What we've noticed a lot more, where buyers are trying to be really careful, is looking at how much of your revenue is contracted. So where you've got lots of renewals, where if you've got doing software as a service or managed service provider or consultancy, looking at how long out those contracts are for. The longer out, the more certainty that gives to the buyer and the higher potential payment they will make. The other area, though, because there's technology is such a wide area, because you've got the basic, you've got the sort of tin shifters, the hardware sales, quite often low margin. So you're usually sort of then valuing those businesses just on a multiple EBITDA. They're sort of more traditional, older type of businesses. You've then got the software businesses, so you'll be looking at their technology. What is the longevity of it? What sort of contracts have they got? Looking at what extra research and developments, because often with the software, you're going through a phase that actually it's loss making for a while it's putting in a lot of the development, and then you start reaping the rewards. So it'd be looking at where you are in that cycle. And then those, again, usually you're looking at EBITDA, but you're probably also looking at the future figures as well, to look at future net cash flows. Then the next area that's very simple to talk about is consultancy. That's an area that I worked in for quite a while. So the consultancy is a bit different of how that's often valued, because it depends on what it is, but often that can be valued out on a revenue multiple rather than an EBITDA multiple. Again, it depends on looking at how long your contracts are. Is that business going to suddenly disappear? Have you got regular retainers to your clients and things like that? Then the most complicated one is the ones that often might even be pre-profit, or, they're the real cutting edge technology firms. So that's where, I've been involved in a firm that was, it wasn't even me had a profit, but it was building up the technology was really impressive, and it was building up its base, it's building up its clients, it's building up its users. And so that actually got sold for millions and millions to a well-known name. So those ones, you're really looking at the potential, and you're doing it based on the future net cash flows and the real potential. So you really need to understand what the business plan is, what the market's like, and trying to understand the technology. That's that's sort of the most complicated area. The tin shifters being absolutely the easiest, through to the high end technical, and at the moment you've got the hot topics are anything that's got AI in it, and also sort of cybersecurity has been really hot as well. So any of those sorts of ones, that's where you are really talking. Those are often like what the investors like to call the unicorns, where you can really, if you get in investing early, you can often get really high multiples on what you've invested, because they just can get, sometimes they're bought for their technology. Sometimes, because you're dealing with such huge technology businesses, sometimes they're being bought to strip out that technology. Sometimes they're being bought to package into something else that they've got. Sometimes they're just being bought to take out of the way to kill the competition.
Yeah.
So, it's that way. So it's really, really exciting area. That's why I've always really liked working with technology sector, because it's always changing. There's always new things. It's really exciting. So that there's sort of you've got the EBITDA, you've got the net cash flow, so you've got the consultancy, and then you've got the real innovation type with the net cash flows as well, but type valuation. So it's 4 or 5 different ways depending on what area those businesses are in.
Yeah, of course. And it's such a dynamic sector, isn't it? There's so many different stages, and for some of those early stage businesses, who are they most appealing to? Would it be private equity? Is it a bigger player within the sector?
Yeah, so often you'll find that the early stages, they do go through a multiple investor rounds. So often they will get venture capitalists or PE at the early stages, and then usually looking the ultimate sale, you want to sell it to a US technology firm, or some other global technology firm. That's the ultimate thing that you want to do. You want to be selling to Apple, Twitter, Microsoft, one of the huge ones you want to be ended up selling to, because they are just constantly buying, looking in for the next thing. So you will get different investors at the different stages. It's very rare to go absolute day one starting, then sold to the end. Usually there might be a couple investor rounds between, because they are expensive to run. Usually they're looking for, they want to have several millions or tens of millions often in investment, all the research and development, and then the actual development can be extremely expensive. But then again, you get other businesses. I mean, one that my husband's involved in, a startup, they got really great, I won't say the amounts or anything, because that's probably confidential, but they had early investment, but they were so sharp on their business model, they actually never had to actually touch the investment money, because they were constantly making profits, but they had that safety net there, which was great. So, and that one, it went through phases of, it got sold, So it had investors, then I think it got another investors, then it got sold to someone, then it got sold to another. There was like three rounds of sales. It ended up being ultimately to a well-known US company eventually. But yeah, so it's very and also the good thing is what people like about tech is it can happen very quickly. So, somebody will come in with an idea and it can make people millionaires within 5 years or sometimes quicker. But, let's assume normally, because you've got to have the idea, the concept, you've got to start building it up. But, but also let's keep your eyes open. There are also ones that do fail as well. So, not all of them are going to work out. I've been involved in one that had a huge amount of investment, and the product worked. It was great, but it was just not the quickest and the most agile to market, and got taken over by other ones. So it just went and often diversified in another area. So there's lots of very exciting things in the tech sector. But sorry, going back to your very original question, sorry, I apologize. I went off on a tangent on the valuations. But on the, but I suppose it's what the what the buyer is looking for is related to what part it is, what type it is, and what things they will, depending on valuations as well. So they're looking for, just as well as me, Nick, don't you? Is they're looking at who is in the core team, what is their product or service, what's the history so far, what is their vision for the future. In that sort of stuff is not really much different really to any other type of sector. But because there's the technology, you just have to really make sure that there's somebody from the buyer side really understanding the due diligence, understanding what it is they're actually really buying.
Got it. Yeah. And so just to recap, I mean, there's as you said, the overall goal is to sell to a Silicon Valley major player, but there are plenty of tech firms with cash on the balance sheet, aren't they, looking to deploy and invest in innovative businesses.
Yeah. What did I read? Apple, I think it was, apologies if I've got this wrong, but I think Apple's gross capital or capitalization now is more than the top FTSE 350.
Is it really? Wow.
Something like that is absolutely huge. And so they've just built huge cash piles. So they've got the money to go, right, I'm going to buy X amount of innovative businesses, and sometimes it's investing in them and sometimes it's outright purchasing. You'll find a lot of centers. So like obviously Reading is the Silicon Valley of Thames Valley. Thames Valley is the Silicon Valley of the UK. You'll find a lot of innovation hubs. Even within, say, Microsoft, they offer hubs to people coming out of universities and that, and setting up their businesses from there. And sometimes they are actually putting money into them and that. So they're getting in really early doors.
Yeah, there's a lot of exciting opportunities, isn't there, and things going on, and great sector to be involved in. So, with all that considered, how or what are some of the ways that you can value a tech firm?
Yeah, so going before, sorry, that's my fault. I already sort of answered some of that, but let me go sort of what that actually means. So one of them I said was the EBITDA. So essentially, it's a technical way for saying net profit. There are some slight differences, but essentially it's a net profit. So you're looking at, sales less the different costs to get sort of net profit. There's a few little adjustments, and then it's the multiple. Now, in the tech sector, you're often looking really high multiples. You might be talking 8 to 10. Now, on the older businesses, the sort of tin, the not so exciting ones, you'll be looking probably lower multiples than that. Really not such exciting. But in the really innovative ones, you could be going up, double digit multiples. and getting really exciting. So that's the traditional one for some of them. As I said, with the consultancy, it's normally a multiple of the revenue, the turnover.
Yeah.
At least one times, sometimes more, depending on the profile of the clients and what else they could get out of it and how high tech it could be. You see quite a lot of the big four accountancy firms buying some of the innovative consultancy firms, which is interesting because they're really looking out, AI is supposed to be taking over, I think, about sort of 70% of accountancy functions. So they're really looking for all the innovations and really lining up for a lot of tech stuff. And they want to boost up their consultancy and their tech and be ready for the next thing. So they're often, for the consultancy side, actually the big four often can be the potential buyers for that side. Besides, of course, the Accentures and McKinseys, although, different things like that. For the net present cash flows, so what you're looking at is you're looking at the future business plan, you're looking at the profit and loss going forward, and you're looking at what the cash flow will be out of that as well. So, because what you're looking at is, with the tech side, it can be, you're never going to forecast it correctly because it's just impossible. There's just too many variables. It's too big a market, and quite frankly, it's either going to flop or it's going to be a success. There's not much in between really. So, they have to take a punt, say, look at the cash flows, look at what does it look. They'll benchmark it against other things and look at what the potential is. And then decide, actually look at their risk profile of the investments and go, well, yeah, actually, no, I think this is exciting. And when you're looking at what they'll be looking at is what is the pipeline, so there you won't have, the more innovative businesses, you won't have long-term contracts and things, but they'll be looking at letters of intent, people that you've had meetings with, the potential, where you've had beta trials, those sorts of things that they will be looking at, like to say, right, okay, you have had beta trials here, you have had a letter of intent, and that will sort of, it doesn't obviously guarantee it because it can't guarantee it in the future cash flows, but it's just giving those extra bits of confidence that hopefully this is something that is going to be going forward.
Got it.
I see that we've had a question come through from Mr. Elks.
Okay.
So Nigel is saying, are you finding that the surge in AI is affecting sales in this sector? Nick, do you have any comments on it? I'm happy to comment on it too.
I think it was interesting the point you raised about the big four and those kind of market opportunities that present themselves. And if you have a business that can pivot towards capitalizing on those opportunities as they arise. So obviously AI's in the tech world, it's not a new thing, but I guess to the mass public, it's at the very start of its journey for most people.
No,
but
listen,
it's being able
AI isn't new, but the leaps in it is what's so exciting at the moment.
Yeah, incredible. And so I guess if you can pivot towards, if your business is already working in that space, and as you said, if you're building those blocks and you're getting the beta trials in place and you're working towards, and I think the other thing to consider is that it's such an innovative sector that businesses are always pushing the envelope. So it's inevitable that things might not work, things might work. And so that undulating journey of, you're always trying to find something that improves something else, a process, technology, a business. And when you're doing that, inevitably, there's going to be times when you don't quite get it right. And so it's about maybe pivoting the business and utilizing what you've done to capitalize on other opportunities that arise, I guess.
Yeah, so absolutely, I agree with all of that. And I would just put, AI isn't isn't new. You're absolutely right. I went on an AI course in Warwick University 30 years ago. You know,
Wow.
it was obviously at the very early stages in the last millennium. But you know, so it's really exciting that it's only really now that you're really seeing it happen. I mean,
Yeah.
even 2 years ago, I was seeing some things. There was some stuff that I was getting presented to that was, you know, quite interesting, but it's just becoming so mainstream now. And I think the next 18 months to 24 months, most people think that's really, you know, and that's why, you know, there's sort of warning bells. Some people are actually worried about the speed it's going to go over the next 2 years. But so, yes, so Nigel's question is, yes, it is affecting sales from two perspectives. One, if anything has got some AI in it, it makes people very excited and is more likely to help with the sale. But also conversely, if it's a business that actually could become extinct because of AI and it's not diversifying or utilizing the technology in a positive way going forward, you know, it's a very limited then of what that value of that business is going to be, because, you know, it may not have any value in a couple of years or you know, it might be 5-10 years by the time, but, you know, it is limiting its life. So so I think it's you're looking for the developments and excitement, which is great, but you're also having a very keen eye on, you know, what is the longevity of this business in this moving AI field.
Yeah, it's definitely one to keep an eye on, isn't it? As we and the fact that it's open source, obviously, opens it out to
absolutely. That's the thing. It's, you know, it's most of it is free. You know, there's some different ways that you can get some up. You know, obviously trying to monetize it now as well. But it's you know our CTO and, you know, my 13-year-old son, they're using it definitely, I think, daily now, really. You know, it's so good, you know, whether you're using it for producing content or if you're using it for coding, there's just so much stuff that it could be used for.
No, agreed. And so given all that, the fact that probably the most important element to a business sale is preparation, how long would you say that a business needs to prepare for, or when should they start preparing for any kind of exit?
Okay, so the best way is to start preparing the day that you set up your business. And to be fair, the one that I mentioned that sold for 7, actually it sold for 8 figures. So apologies, I was underestimated. It was 8 figures if you go into the right exchange rate. And they did, literally, they had a very clear plan. This is what I want to set up. At this point, this is when I'm going to be ready to sell. And so all the right time, you always then have an eye on thinking about what is the buyer going to be looking for, and making sure and being aware that that buyer will be looking at everything. So, but, you know, if you haven't been preparing since you started, you know, you need probably 6 months to a year to start really prepping everything, getting everything ready. And then probably a year to 18 months for the actual sale to go through. Obviously, there are ways to shortcut things. You know, if you utilize experts, bring it in, really condense, really focus, you can shorten these cycles. But, you know, realistically, if you're trying to do a lot of the stuff yourself, and then you know, utilize a broker, and you're trying to maximize yourself, because that's the thing as well, is you don't want to be in a stressed sale. So you could still go into a good sell and it goes through quickly, but you don't want to be going through a stress sale. So you don't want to be going, oh, right, I need to sell because my investment money has run out and I need that extra investment to do my next lot of development. That's not a good look. So, you know, you want to be, you always, with the investor, you invest, if you're going through investor cycles, you want to be trying to make those investor periods as long as possible. You don't want to always be working on, all right, I've got to now prepare for my next lot. So yeah, it was interesting. I was talking to someone that was talking about selling this morning, and we were talking about the next election. Worst case January 25, but it's more likely going to be autumn next year. So if you want to get sold before the next election, because there may be various reasons why you may want to do that, not always, it might be. But if you did, you need to be getting ready now. There's not enough time. You need to get now. Like we've got a deal that we've both been working on that should hopefully, fingers crossed, close this week. That one actually been earnest like 18 months, really, wasn't it, to get that across? And that's super organized. Do not underestimate the time it needs to be taken. I think I've referred to a particular deal before that did get sold to a big, and this is not the one that I mentioned earlier today. This is another one that was done a few years ago. It was about 6 years ago. That one got sold for a nice figure. It was a 7-figure deal. To a good American company, but it actually took about 3 years because it went through, we might be going to this buyer, and then something not happening, and then you kept waiting for that. So and I was looking after the due diligence room, so 3 years of keeping that due diligence room up to date. But sometimes it does. But and it's a good position to be in as a seller, to be able to say, this deal's not quite right, I'm going to wait for such and such. And so if you've got the time, then great. But that's why not to rush it, so that you can do full marketing, get all the right players in, and see what you can see that you can maximize the price. And on the tech side, it is very wide. It's not a matter of just little percentage differences. You can really be tens or hundreds of millions different by getting in the right buyer. It's huge. It's not, you're not counting the pennies in the real innovative type tech sales.
Yeah, no, completely. And so for any business owner in the tech sector, if they're at the start of their journey, as we spoke about, without an eye on the exit, can they just pick up the phone to you or Nigel and talk through their options, even if they're the very start in the innovative stages?
Absolutely. We're always happy to talk to people, even if they're not going to sell until it's 5 years out. It's never too early to have a call to talk about preparation, because before you know it, you're another 2 years in. Then you need to, because you'd be thinking, I haven't got time to go through all the detail now, but there's so many different stages. It's never too early to start those discussions, and making sure that you don't make fundamental mistakes at the beginning. Even the basic things. I know, like Stuart Munn was talking about the other day. Making sure even the basic things, making sure that you're keeping your company register up to date. All of those sort of things. If that's all a mess, and you're trying to sell it, and then you're like, well, what are you trying to sell? You don't even know what your shareholders are. So that's one tip. One tip to end on: never promise percentages of businesses to employees or investors, or whatever. Always talk about shares, because as soon as you then have another shareholding round, those percentages change. So always talk about actual numbers, because otherwise you can, especially if you start putting percentages into documents, it completely mess up things up.
Yeah, great tip, fantastic tip. And I dare say that's one from experience, Nikki, because there's not much you and Nigel haven't seen the amount of deals that you worked on. So great tip.
It's very upsetting when you've got somebody at the early stage that was being promised, 5% of it, and you're like, well, oh my God, now that's actually a few million. Do I really want to be doing 5%? You know, it needed to have probably been diluted down by that point.
Completely. Well, thank you so much, Nikki. I think there's a lot there to take away for any business owner that's been watching, or anyone that's looking to make an exit. So yeah, thank you so much. Wealth of experience and knowledge condensed into half an hour. Thank you.
My pleasure. Thank you, Nick. Thank you. And if I just share with people what is coming up next week. Next week, I still need to firm up the speaker, but we're going to be talking about packages, about enhancing your packages without having to increase the base salary too high, because what we're trying to talk about is minimizing wage inflation, which obviously the Governor of Bank of England was talking about yesterday. Unfortunately, no one wants to listen to him when he's on 500,000. But anyway, yes, we're talking about sort of packages of how, you know, people be thinking that, you know, I'm already thinking, God, because we normally do ours in September, October, and you're thinking,
yeah,
really, we did a huge salary increases last year. Do it again this year. There's, you know, what. You know, it's a lot, can be a lot of stress on the SMEs. So that's what we're talking about next week. And we will have an HR employment law expert discussing that. And I'm just getting who is, I think the following week is an HR and legal update thing on what. So if you have staff members, is some good tips on that. So that's from Owen Clark at Peninsula. And then on the 14th is getting ready to chill out, ready from the movement from being in full on new business into the summer season. We've got Judy Clawton talking about meditation and business practices on the 14th. And then we're closed for the summer period, and there's all exciting things to announce soon, what's going to happen from September. But thank you so much. Thank you, Nick, for joining me today. That was great.
Pleasure.
Thank you.
Thank you, Nikki.
And cheerio, everyone. Please do contact us for succession planning. Any questions regarding sales, just anything, whether you're thinking of building up your business sale. And as always, Grudge Accountants for any accounting things in between. Thank you. Cheerio. Have a lovely weekend.